Hello everyone, and a very warm welcome to this ICAS webinar in association with Sage. For those that don't know me, my name is David Mingus and I'm Director of Practice here at ICAS, and it's my great pleasure to be hosting this webinar for you today. So MTD for income tax has been talked about as a subject for quite a long time, but in 2026 it will finally become that reality. And I'm sure there are plenty of tax practitioners that kept thinking that it would never happen, or that there would be further delays in its implementation, or frankly, simply buried their head in the sand, not wanting to have to deal with another significant change impacting not only their business, but also clients and how they will interact with HMRC as their tax advisors. However, as we start 2026 and as we head rapidly towards the all-important date of 6th of April 2026, when the first mandation takes effect, we really are at the stage of the final countdown. So the question really is, are you ready? Well, whether you think you're ready or you know you still have some progress to make, this webinar will help you understand and prepare for the changes ahead with confidence, while there's still time to get ahead of the curve and evaluate your practices, readiness and priorities ahead of that all-important April deadline. To help explain and help us understand a bit more about what you might need to consider to get ready, I'm delighted that we're going to be joined by Sage's MTD expert, Chris Downing, today. Chris is Director of Product Management for Accountants and Bookkeepers at Sage and has nearly 20 years experience as an accountant in practice before joining Sage. Chris is a well-respected and probably well-known voice to many of you in the profession and is hugely passionate about technology adoption to drive efficiency and growth for accountants and SMEs. Chris has spent the last several years helping the accounting profession embrace technology, navigate change and make digital feel doable, as well as bringing together the world of accountants, software and government. But before we begin, just a few housekeeping matters to remind you of. Chris is going to be able to take questions throughout the course of his presentation. You do have the Q&A facility, which is available at the top of your screen. So do submit your questions through there and they can be submitted anonymously if you want. You can also join the conversation today through the chat box, which is again accessed at the top of your screen, and this allows you to comment or discuss with fellow attendees on matters covered during the webinar. This webinar is of course being recorded and we'll make it available on the ICAS website for on-demand viewing afterwards, in case you want to refer back to it at that point. So, as I say, Chris will be taking your questions throughout the course of the webinar. Do join in as much as possible. We'll hopefully get through as many of those. But I do know Chris has a massive amount to get through. So, without further ado, Chris, I'll just let you get on with it. Thanks very much.
Thank you very much. So yes, this is part of a series of MTD webinars, and really this one's all about let's get to grips with the legislation. Let's really understand what is happening and think about what we need to do to get ready. So this isn't about what software is available and all demos, etc. This is purely about making sure we've got everything we need to know to understand what's happening. That's the bigger picture of MTD. So therefore, as I said, for anything which I mentioned, which you need a bit, let's say, confidence or confirmation on anything, just put in the Q&A and I'll deal with it as we go along. So where are we today? So we're on the 15th of January, and you think about what we need to do over the next couple of months. Really, the next couple of months, the next 55 working days are literally going to evaporate, because what we need to do is be ready for making tax digital from the 1st of April. And this isn't just about digital record keeping, it's about getting our clients set up on the agent service account, it's having conversations about what they need to do, their responsibility, but think about pricing, letters of engagement. There's a lot of bureaucracy beyond just actually putting some data into a piece of software. And I think this is one of the challenges we always face as a profession, is the fact that these themes, these legislation earthquakes come along, but they don't really consider actually what we need to do in practice. So this is the whole point of giving the confidence in terms of what the rules mean, what we need to do, how we actually use MTD to our advantage, but it's also the priorities of what we need to do over the next 3 to 4 years, because MTD is landing and it will be growing and becoming a little bit more challenging as those various cohorts come along. So let's just thinking about really, before we get into the detail, let's consider what our lovely clients actually think about MTD or actually know about MTD. So Sage did a survey of about 1,000 sole traders back in September, so it's quite timely. And really, only a third of them actually had any true awareness of making tax digital. And I think this probably resonates quite well when the conversations that you have. But actually, once those people understand MTD is happening, and they've read the criteria and the impact and the benefits around it, they actually feel quite confident around it, which I think is a useful thing to have because like everything, it's all very well looking at the headlines of making tax digital, but it's going to understand what it means to them and also what it means in terms of understanding their taxes and maybe the benefits it brings to their business. But also it's the fact that they are quite unlikely to take much action. They need to be told to go and do something. And I think this is the thing is it's HMRC just assume there's the deadline naming, things will happen. No, it's not. Apathy will kick in, and therefore sole traders and landlords will probably need their hand held or maybe a little stick coming along to say you need to do this at a certain time. But also the other big thing is they're challenged about maybe the additional administration around it. And I think when you consider how most taxpayers are behaving right now, it is the 15th of January. There's a couple of weeks to go to the deadline. There will be 4.5 million tax returns filed this month and 1 million filed late. People work towards deadline. And this is the key thing is the fact that they may be considering, well, the admin I do right now, am I going to do that 4 or 5 times a year? Well, maybe, maybe not. It depends on how they work. But this is the key thing, is the education and awareness around it. But also in the background, HMRC effectively are trying to digitize themselves as much as possible. The first phase was MTD for VAT, which is now just VAT because there is only one way of doing VAT because the old database has now been switched off. But also HMRC are trying to bring together all the various databases, all the taxpayers' information, all into one database just to make it more accessible. But also with this, they are scraping information and also being provided information from various different sources. So you imagine the digital reporting rules, which came into place 18 months ago. They are now getting a report from Amazon and eBay and Vinted and Booking.com. Basically, anyone or any individuals selling their services or goods on those platforms, there is now a report delivered to HMRC of the total gross revenue, which basically means, though that report is meaningless, because it's to a January to December year when actually traders are from April to March, it gives a nudge and a prompt in terms of actually matching maybe income reported on a tax return to actually maybe what people are receiving on these platforms. But also with this, with HMRC connected, they're surfacing information from various other sources, whether it's banks or mortgage brokers or share brokerage. So they're having a better understanding in terms of what people's income and expense streams are. But really the thing they don't have access to is probably the small business unit in terms of actually how are they behaving, what's their turnover, what's their profitability. But with this information, they're trying to give a better understanding of taxes for the small business owner. But let's get into the details of MTD. Well, as we all know, as we all appreciate, from April this year, sole traders and landlords with gross income of more than £50,000 will have to maintain their records digitally. This could be an Excel spreadsheet with a bridging tool, or actually preferably in software, because then life just makes it a little bit easier for the end of the year process. Maintain their records digitally, submit a quarterly update, and also file their tax return via software. Now, that's a really big thing, because obviously as accountants, you already use software to file tax returns, but 35% of sole traders and landlords do not work with an agent. They go onto the HMRC website once a year, pop some numbers into some boxes, and file their tax return through a web form. That is disappearing. So just imagine what will happen is, as we saw with MTD VAT, even though the process didn't really change, using software is a big change. And therefore, business owners who used to file their own VAT returns suddenly came to an agent to say, could you please file the VAT returns for me instead? This is going to be no different. We're possibly going to see a vast majority of those 35% unrepresented individuals seek out an accountant or bookkeeper for the very first time to support, not only in terms of digital record keeping, but obviously from the tax return purpose, because even though the software is going to be intuitive for doing the tax return, it's going to be changed. And therefore, when we consider, let's say, the next phases, it's not just about sole traders and landlords, it's also thinking the impact that has on certain deadlines. So if you imagine we will get through the next 2 weeks, we'll get to the 31st of January, within the next big deadline to be the 7th of February being the most busiest VAT quarter of the year, because that aligns with the March year ends. But just imagine what that VAT quarter will feel like in February 2027. Because not only will be the VAT quarters, it'll also be quarter 3 of year 1 of the first phase of MTD. And this is why it's so important to get ready and consider how we're going to manage this workload. But then we're thinking about the first deadline. So it's the 7th of August, 2026 coming up, but also the extra phases. So from 2027, the threshold dropped down to £30,000, 2028 to £20,000. So therefore, sole traders and landlords with gross income will be following a new path. There is no news in terms of what will happen after 2028. But when you consider what HMRC are trying to achieve, moving everyone from the old systems to the new systems, I would not be surprised if in 2028, there'll be announcements saying all sole traders, all landlords need to file their taxes via software. Whether they need to use digital record keeping throughout the whole year may be a different theme, but certainly they'll probably be moved to bring everyone across. And then at some stage, the other 9 million taxpayers who currently use the old system will probably have to use software to file their taxes going forward. So really, self-assessment will be removed over the next couple of years, and everyone will be filing through the new platform. Now, in terms of entity types coming into play, partnerships are outside the scope of MTD. There are only 350,000 partnerships in the UK, and about 50 to 60% of them already VAT registered. So they're already using software. So there's little need to actually build a new platform or reporting engine just for such a small cohort. And when we think about cohorts, in April, there will be about 900,000 sole traders and landlords coming to MTD. Trouble is, 2027 is going to be the big year, because that's 1.1 million individuals with over £30,000 of gross income who are probably only making £15,000, £20,000 a year profit at most, paying very little in terms of compliance and vendor year. And they are going to be the ones who are going to be the most difficult cohort to get across the line in terms of you using digital record keeping. But also in the background, and I think this is why it's so important to look at the bigger picture of what's happening, is the fact that April 2027 is actually going to be a momentous month, because not only do we have payrolling and benefits in kind, so the P11D is dead, so therefore any benefits in terms of health insurance or car changes, etc., will now have to be reported monthly via payroll. So an awful lot of change, choosing the right software, considering pricing, because obviously payroll pricing have to change, but getting clients to change their habits, share information more regularly, but also companies' house reform. Yeah, we're going through an awful lot of companies' house ID changes. It's not a fun time, but actually from April 2027, 2 key things are happening. Number one, the removal of web filing for separate company accounts. 900,000 of them are done that way each year. That will be unavailable. They'll have to use software, and they'll probably be calling out to an agent for the first time saying, could you do my accounts? But here's the big one, and it's been quiet for some time. From April 27, from the 1st of April 27, small limited companies will now have to report their profit and loss account, which basically means a limited company turning over £120,000 will now be reporting their turnover, their costs, and their profitability. And therefore, the shroud of mystique in terms of business performance will be pulled away. That's a really big thing. And there's been no new news in terms of where that's going to be delayed, which means, really, if you've got limited companies with an October 26, November 26, December 26, possibly January 27 year ends, guess what they're going to be doing? They're going to be asking, pretty please, could you prepare my limited company accounts 6 months sooner than later and file them by the 31st of March 2027? So therefore, when we think about the next 12 months, I cannot stress, and I've been saying this for quite some time, it's going to be the busiest 12 months the profession has ever faced. Not just getting ready for MTD phase 1, getting ready for MTD phase 2, and considering the additional accelerated workload around payroll as well as companies' house filing. So this is why it's so important to have the clarity in terms of what MTD really means. What does filing actually look like? What does one file? But also the admin around it, and also making sure you get the pricing right. So when you think about it, MTD is about quarterly reporting. So in the background, we'll be going from to filing VAT returns. We'll also be filing quarterly updates at the same quarter dates for the most busiest VAT quarters. So it is going to be very busy. And therefore, we need to be thinking about how to use software differently, and also make sure our clients are behaving as they should be. But then we think about what is the communication channel. So HMRC already did a big letter drop back in May and June this year. Effectively, any 23, 24 tax returns where the gross income was more than £45,000, they received a letter. That was done over a couple of months, drip feeding it out to the market. Any tax returns filed for 24, 25, filed by the 31st of August just gone, that's about 200,000. They would have received letters by now if their gross income was more than £50,000. And just reiterate, when I say gross income, this is just sales, this is turnover, this is rent received. It excludes anything from employment, it excludes any capital gains, it excludes any pension income. It is only interested in terms of trade as well as rental income, that calculation. But also in terms of further letter drops, the remaining letters, probably about 700,000 of them, will be dropped in February and March time. That's going to be a lot of people will probably just ignore the letters, but there'll be an increase in terms of awareness coming into play for those sole traders and landlords who are not aware of making tax digital. Clearly, HMRC are doing some advertising and marketing campaigns, but really the focus has got to be what is the conversation and the communication you're going to be having with sole traders where you do full set of accounts, P&L balance sheet because they have fixed assets and sales ledger and you're managing the debt, to maybe those smaller sole traders where it's more cash in, cash out. They're not sophisticated. Probably majority of those are going to be 2027. And then also those troublesome landlords who don't see themselves as businesses, keep very, very limited records, but then become quite complicated when you've got joint property ownership and maybe actually a misunderstanding in terms of what they can claim or can't claim as well. So let's start getting into a little bit of the detail in terms of what submissions actually look like. So if we take the scenario, a self-employed plumber, Pete the plumber, repairing leaks Monday to Friday. He has to maintain some digital records, file a quarterly update, and then also do a tax return. Now, if Pete's got a bit of a side hustle, maybe he's selling goods on Amazon at the weekends, that's another trade. That will require another set of digital records as well as a quarterly update. Now, if Pete has some property, and therefore that is now coming into MTD, that's another set of records, that's another quarterly update. Now, if Pete has 10 properties, that's still just one quarterly update. Now, if Pete actually owns property with his brother or his best mate or his spouse, that comes under joint property ownership. And again, any share of rental income or associated expenses with that rental income needs to be reported in a single update. And that's where the complication lies, because you just imagine it's hard enough collating information already, but doing that on a quarterly basis and doing that share is quite challenging. Now, HMRC have listened, they realise it is a bit challenging, and they have an easement for joint property. So under joint property, the easement is one does only report the share of rental income from it. Now, personally, I don't really see that as an easement because you still need to get the information through. You still need to report it through software, and then you still, at the end of the year, need to collate the expenses and the share and file it. But also, you need to chase your clients for it. So really, the habit is getting to share information on a regular basis with it. And therefore, there are specialist software out there like Hammock, for example, who does joint property ownership really, really, really well. The other ledgers will be quite happily dealing with, let's say, a landlord with owning multiple properties themselves, but joint property ownership becomes quite complicated at stages. And then again, let's just say Pete's got his timeshare in Spain, that's foreign property income. So again, another set of records and another quarterly update. Again, if you've got any questions, just please drop them in the Q&A and I will deal with them. So what does the year end look like? Well, from an accountant's point of view, the year end doesn't really change because you still take the raw data, you then do all the adjustments, you then bring in other sources of income and then deal with the tax return as is. It is. The deadline's not changed, still the 31st of January. The big thing about the tax return though is every accountant today uses self-assessment software of some shape or form. So whether it's from Sage or Xero or Digita or CCH or Iris or TaxCalc, you all use the self-assessment software. However, everyone is having to build brand new MTD tax return software, which basically means as a practice, you'll have tax return software for self-assessment, and then you'll then have tax return software for MTD, which then creates a little bit of a complication, doesn't it, in terms of managing what's been filed, think about the processes, especially when there is no such thing as a tax return under MTD. So it creates complication. So this is why it's so important to start being inquisitive, and whoever you work with for your tax return software, start asking them, what does it look like? How do I use it? And we'll go into a little bit more details over that in a moment later in the webinar. Now, the other key thing about MTD, we've got penalty points. So we're already familiar with penalty points under VAT. That's been around for a couple of years. So under MTD for income tax, for every late submission of a quarterly update, that then gets a penalty point. Now, in terms of, let's say, multiple situations, you've got Pete the plumber with property. Let's just say he was ill and wasn't able to submit his 2 quarterly updates for that quarter. Fortunately, that's just 1 penalty point. There's only 1 penalty point per individual per quarter, not per the number of submissions required. Now, penalty points mean financial penalties. So once 4 points have been accrued, that is when there'll be a £200 financial penalty. Now, in a situation where you have a sole trader who's also VAT registered, so potentially they could file their VAT return late, as well as their MTD quarterly update late, though that'll be 1 point each, that's 2 points, they are not added together for the financial penalty. And in every course of life, points are reset for good compliance. So after 12 months of filing a quarterly update on time, that point will then be removed after 12 months. So the situation could be if your client's got to 3 points, they'll have to be good for 12 months and file everything on time for those 3 points removed, reduced down to 2 points. Now, the big announcement, which was in the most recent budget in November, was there is now going to be a soft landing period. I've been saying for quite some time, there'll be no soft landing period because it'll be crazy to have one. However, we now have one. So what this means is we are currently in the testing year for 25-26. MTD happens properly from April 26 for 26-27. Any quarterly updates submitted late for 26-27 will not accrue a penalty point. Now, this is probably, depends on where you are on the fence, a good or a bad thing. I think it's a bad thing because the stick, the nudge, the prompt has now been taken away to encourage your clients to actually share information and hit that quarterly update date. Because as a professional, you have responsibility to ensure your clients are meeting the law. And that is actually filing their MTD quarterly updates on time, because the penalty point may be removed, but your clients still have a legal responsibility to maintain their records digitally from April, submit a quarterly update by the due days, and submit their tax return via software. So the legal responsibilities haven't been removed, but the penalty points have. So it's going to be an interesting conversation to encourage those nudges and prompts going forward. Just seeing any questions coming through. Where will Airbnb income fit in? Well, that's trading income, isn't it? So it's a case of, it depends how it's treated, isn't it? So obviously FHLs have disappeared, but really the key thing is when you've got your client, what have they got reported the SA 103? That's trade. What are they reporting the SA 105, which is property? When you set your clients up on the agent service account, you're effectively replicating that. So it comes down to where has Airbnb been reported to date? And I suspect it's on the SA 105, so that's going to be property. A question from Karen here. Oh, hi, Karen. How will it work if you have a client with joint property, but you only act for one party and not the other joint owner? Will the software allow us to allocate 50% of the income expense among the? That's a really good question. And one of the key things I've been mentioning is actually there may be some consolidation in terms of agents, because it does seem weird where you have 2 different agents for maybe looking after the joint property portfolio. And this comes down to the point is there'll be so much hassle to journal in or process 50% of the property share in a digital record which you have access to. And this is why software like Hammock deals with it quite nicely, because you are only being charged by the number of properties, you have multiple access, so the various parties of that joint property ownership can take their records. If you've got an individual with a single property by the name, it gets consolidated nicely. So really it's using the right software really. Now, clearly if you don't want to use Hammock for that and use some of the other pieces of software, whatever it may be, again, you got the challenge there. You may have the bank feed coming through, but then you have to then split it out to the proportion. And that's the challenge it is. And I think this is where it's a case of using the right software to solve the problem and not shoehorn the problem into your software, which you think can solve the problem, because you're going to end up spending so much time and hassle to try and make something look pretty when actually just go back and use software which does the job well. I hope that answers your question, Karen. Any problems, you know me on LinkedIn. I'll go into more detail if need be. So I think that soft landing sorted out. So let's think about planning and let's think about the submissions. So the key thing is HMRC will assume that all your clients have a 5th of April year end. They'll assume it. If your clients have a 31st of March year end, so that is calendar reporting, you need to inform HMRC via software in the first quarter of each year. That's a really important thing to remember because you cannot change it. Once you've made the decision, is it standard or calendar reporting, you cannot change it in the year. You can only change it for the next year. And we know from testing, people make errors. People can't make up their minds what their year ends are. And that's screwed up some of the testing this year so far. The other key thing is your client cash or accruals basis? Again, you need to make that decision at the beginning of the financial year. Tick the box in the software and you cannot change it again thereafter. Now, in terms of these submissions are not a set of accounts. They are not a tax return. HMRC do not expect them to be accurate. HMRC do not expect accruals, prepayments, inventory adjustments, fixed assets, and depreciation. This is literally digital record keeping because the spirit of MTD is to help to improve the quality of the underlying records and encourage information is captured, the right information. So if you imagine today, we've got an awful lot of taxpayers doing their records right now, but they're trying to scrabble around for expenses from 18 months ago. Well, life would be easier if they're encouraged to capture that information on a weekly, monthly, quarterly basis. But also because these are cumulative submissions, so quarter two or period 2, which is due on the 7th of November 2026, that's going to include all the transactions for a 6-month period, which basically means if, for example, motor expenses, fuel receipts have been posted to motor expenses for the first 3 months, and you as the accountant come along and say, I don't think fuel receipts is the way forward. I think you should claim mileage. You just move fuel receipts to drawing, just put a journal in for mileage. It doesn't matter. The whole point is to capture something and encourage that approach to it. But also the key thing here is understanding what needs to be reported and when. Now, unfortunately, everything needs to be reported on the 7th of the month following the quarter end. But the challenge with that is also falls with a very busy VAT quarter. Now, don't see that deadline as a target to submit to, because few people talk about the idea is actually you can submit a quarterly update 10 days prior to the quarter end. So, for example, that first quarter being the 5th of July 2026, you can actually submit a quarterly update from the 26th of June 2026, i.e. 10 days prior to that. So you've got a longer period of submission, which basically means where you have simple landlords, simple sole traders, it's a case you don't have to start waiting to submit. You can submit as soon as you like, but also you can submit as many times as you like. So you could submit quarter 1, let's say on the 10th of July 2026, some new information comes through, submit it again. It doesn't matter. And that's the key thing, is the fact there's flexibility in the system in terms of what can be submitted and how. Now, the tax return, as I said, is still due by the 31st of January by the following year. But also the other key thing is there are no plans to change to quarterly payments on account either, because really that would just be silly and crazy, because the transition to go from payments on account to quarterly payments would be real hardship in terms of the sole trader in managing that cash flow. Just checking if there's any more questions coming through. You mentioned you can't change the cash or accruals basis after quarter 1. Does this also apply to the year-end process? Yes. Once you've made a decision, you cannot change it. So it's so important to make that decision correct. But also, I think this is an interesting factor, is we all know what cash accounting is. We all know what accruals accounting is. The majority of our clients are actually on accruals accounting because it just makes life easier for the year-end accounts. But think about how you can do the data processing. So, for example, you tick the box on accruals accounting, you bring in your bank feed, you post receipts to sales, you post expenditure to all the cost categories. That's on a cash basis for the quarterly reports, isn't it? But what you then do at the end of the year, you ask your client who owes you money, journal in the sales ledger. Who do you owe money to? Journal in the supplier ledger. That's accruals accounting. So effectively, digital reporting can be done on effectively a cash basis throughout the whole year to make it easier. And then at the end of the year, journal in the the various items to bring the sales ledger, i.e. its ease of use. And this is the whole point, is understanding and thinking about what is digital record keeping and meeting the bare minimum of MTD. Question from Tracy here. How will this work for a PAYE taxpayer with only £4,000 to £5,000 property income, £3,000 to £4,000 of profit? So are you saying £5,000 of property income for the whole year? Well, they'll be out of scope of MTD because, as I said, PAYE is excluded from the calculation. So when I say £50,000, that excludes PAYE or pension income. It's literally just the turnover or total rent received. Okay. Now, something you need to be mindful about, though, is you could have a sole trader turning over £60,000. So Pete the plumber. Pete has a spare room, rent a room. Okay. He's renting that room out for £8,000 per annum. He uses the £7,500 rent a room leave, so he's only showing 500 quid. But because it's gone beyond the rent a room allowance of £7,500, that £500 then kicks in the requirement for him to do quarterly reporting on his rent a room. So again, understand your client base and even identify those who have rent a room. So really, this comes down to the bear with me, I've lost my mouse. This really comes down to your responsibilities as an accountant, isn't it? And this comes under the PCRT guidance. So nothing's really changed. Your obligations are still there. You have a moral responsibility to avoid false declaration or misleading information. But also the key thing here is understanding in terms of actually ensuring you're using the right information with availability. Now, with this, it's also important to reflect upon secondary agents. So if you have a bookkeeper doing the VAT returns, they can also do the quarterly updates. They are a secondary agent, but this is really important to have the communication. So therefore, whether you are a bookkeeper or a secondary agent, speak to the main primary agent. As a secondary agent, all you can do is a quarterly update. You can't see the taxpayer's information or file a tax return. But then also the other key thing is document what your responsibilities are. Have a schedule of services in terms of what you are engaged to do in terms of digital record keeping. Because when you consider the reality of what's going to happen, at the moment, when a client moves from one agent to another, the last set of accounts is a set of accounts where everything's been done. The trouble with MTD, clients will move partway through the year. And therefore, you need to be very, very clear in terms of what were you engaged to do. Were you engaged to simply code up the bank account? Were you engaged to reconcile the bank? Were you engaged to actually reconcile the sales ledger? Yes or no? Because really what's going to happen is you're effectively going to hand over your part finished homework halfway through the year to another accountant, aren't you? And this is why it's so important to have a schedule of services and your client knows exactly what you're engaged to do so, and therefore there'll be no ambiguity in terms of what the handover information looks like as well. So this is why I also mentioned about the importance of testing. Because as we know, we're in the testing year right now. So the testing year is all about using the system, understanding the system, no penalty points. Now, part of testing is obviously you have to get your clients set on the agent service account. Now, this is a real thing to concentrate and think about. Right now, there are only about 3,000 sole traders out of the 900,000 sole traders in testing, okay? That is supported by a small number of accountants and bookkeepers. Right now, HMRC have a lovely helpline. You dial it, it gets picked up in 2 rings, not 2 hours. That is a dedicated helpline for MTD. Part of the things with MTD, you need to get your client set up on your agent service account. This takes 4 to 5 minutes. You need to put the details of the client, the names, the addresses, identify the various trades and the property. If you have a problem, you can call the helpline. But just imagine, from the 1st of February, once self-assessment's done, there'll be 42,000 accountancy firms all trying to get their clients ready for MTD. They maybe just have one client that gets through on the agent service account. There'll be 42,000 accountancy firms calling a handful of helpline people at HMRC. So I would really encourage you to actually think about getting your clients on the agent service account now. So as you're doing your 25-26 tax return self-assessment, you've got the information in front of you, you've got all the details. As you press file the tax return, go on the agent service account, validate the information and move on. So if you've got any problems, you've got everything in front of you as well. So therefore, I'm just warning you that it's going to be insane for February and March with the helplines and MTD because everyone will have a problem. Now, the other advantage of joining testing is, come into testing now, you do not have to file Q4 for 25-26 until January 2027, okay? The advantage with that, though, is you experience not just MTD quarterly updates, but the tax return. Because by entering testing, you'll have clients in MTD, which means you can start to experience the brand new MTD tax return software from May this year. That's the bonus. If you don't have any clients in testing, you will not be able to actually experience the MTD tax return software any earlier until May or June 2027. So this is why it's so important to think about clients who get into testing. Before I get into segmentation, I'm just having a quick look at questions. If a client has 5th of April year end and all Sage reports dated 5th of April, when last financial year is selected, debtors, creditors, trial balance, P&L, etc., some accounting patches can't cope with 5th of April as default 31st March. I suspect if they've got sales or purchase ledger, you'll report the 31st March, aren't you? That's the key thing. And therefore, if you are reporting 5th of April now, how are you doing the reports if they're not working? If you have a business rental income, will this be able to be managed in a single software solution? Well, the question is why? Because the reason why you may need a single software solution is if the farmer is VAT registered, he's got some outbuildings, he's renting that out on his SA 105, and that's going to VAT return. So yes, there'll be a complication around that. But when you think about actually what is best practice, it's actually have a single ledgers for each trade or each property or rental property. The reason being, it removes the ambiguity and the tracking of the income and expenditure. So from our point of view, we encourage an extended nominal ledger approach. Some software providers do tracking codes, but the trouble with tracking codes is there's no mandation within the software to ensure transactions are always tracked. So you never know everything's complete. And this is why it's best practice to have a separate software everything. Now, from Sage's point of view, we have a free software solution called Sage Individual. That will be able to deal with property. So if you've got a landlord, that's all sorted for you. Could you talk about how the qualifying gross income threshold is calculated? Are we looking at someone's total income for a year, or do we look at the sole trade income? If so, earns 30 grand from part-time employment, 30 grand sole trade. It ignores employment. This is literally just the sales from your trading business or your total gross rent. They are the only numbers which are used for the calculation of thresholds based upon the previous year tax return. Question from Graham. You mentioned you would journal in debtors and creditors at the year end. What about stock? Same thing, journal in. Prepayments, accruals, just journal in and yeah, done and dusted. And last question before I dive into the content again. What are your thoughts on HMRC introducing quarterly payments on account based upon the quarterly update? It's not going to happen. The quarterly, though a tax calculation is created on the quarterly update, it will not have the nuances of other sources of income, maybe even pension contributions and capital allowances, etc. Plus also thinking about the transition. Payments on account just work. Just imagine you have to pay your July payment on account and then have to pay quarter 1 of the current year. That will literally screw up an awful lot of small business owners in terms of cash flow. So I don't really see it happening. The only way they could bring it in is if you're a brand new sole trader coming into the tax system and they slowly eke people out the system, but who knows? Let's just concentrate on what we know about MTD thus far. So let's think about segmentation. Now, segmentation is really important. It's really getting to know your client, understand the trades, the criteria, their goals or aspirations. Why put a client on a proper bookkeeping tool if they're going to retire in 18 months? But the same thing, if you're a client who's got aspiration to grow, don't put them on a cheap, cheerful, free solution. Put them on a solution that's going to grow with them and deal with the VAT. And that's why it's so important to know your client needs. But also with this, just don't think about your sole traders and landlords. Think about your limited companies. As I said, companies house reforms coming along. Therefore, it's a case of how do all your clients operate digitally or non-digitally, and how you're going to make them better behaved in sharing information. But also then consider actually what is the approach. It's a case of which clients are coming in, what's the dates, what's the thresholds, what are their periods end, 5th of April, 31st March, document it and get it right. Is it cash or accruals basis? What clients should be suitable for coming to testing? Then it's thinking about the actual approach of doing the work. Are you doing the work? Is the bookkeeper doing the work? Is the client going to be doing the work? Get that right, and that will then surface the type of services that you're going to be delivering, which we'll cover in the next webinar. Again, rental, how complex is it? Is it one property, multiple properties, joint property ownership? Is there a managing agent? because obviously with a managing agent, the rent may be £1,000 a month, but you're only receiving 800, which means you then have to journal in the £200 managing agent fee, all of which creates an element of complication. And then also thinking about, let's say, the record keeping approach already today. How is it done today? Is it manual records, Excel spreadsheets? Is it software? Is it suitable software? It's amazing how many traders use software just for raising an invoice, but it doesn't do bookkeeping. So they may be using software, but it's not MTD ready. And this is why it's so important to have the conversation about how information is being captured. And when it's been captured or whether it's been reconciled, what's the frequency? Daily, weekly, monthly, quarterly, hopefully not last minute. But also the fact is, we're walking into April 2026 when we haven't done the 25-26 set accounts. So when is that going to be done? How is the acceleration of that work going to be performed? We'll be going through that in the next webinar to go through the best practice for that. But again, the other key thing is bank accounts. A typical sole trader has a single bank account where they've got their trading business, they're going to have rental income, and they've got their domestic life. So you've got your Netflix subscriptions, their gym membership, and their beer money. Trouble is, you probably end up with more domestic transactions than business transactions. And life would be easy if they had a separate business bank account to record and maintain at least one side of their life. And that will make it easier in terms of the quarterly reporting. Then it's thinking about the communication. We'll talk about this in probably webinar 3 after this one. It's all about fees. How do you actually start to price them in, making tax digital? What's the best practice? What's the communication level? Getting clients to pay from annually to monthly, getting them to catch up, because obviously this summer you're going to be billing them for self-assessment for 25-26, as well as asking them to pay you money on a monthly basis for dealing with MTD at the same time. But also it's thinking about how is the client going to interact? Are they going to even going to bother? Are they digitally engaged or not engaged? Are they really hands-off in terms of the process? Then finally, it's thinking about how do you make sure your staff are really aware of what's going. Join webinars like this, but the key thing is having client awareness as well as colleague awareness, and think about how you make it more specific, whether it's events, face-to-face, telephone calls, emails. The approach to marketing is going to be constantly on because MTD is not going away. 26 is obviously our biggest year, but then 27, 28 is going to be very interesting periods. But also think about how you engage with your software partners. Just having a quick look at questions. What is the mechanism to notify those clients who meet the criteria for April 2026 based upon the 24-25 turnover, but they have since either retired or changed or basically they've ceased trading? So if you imagine HMRC will be sending a letter to them because based upon the 24-25 tax year. What will happen is you'll register them up on the agent service account, so they're set up there, and then there will be a mechanism with the agent service account to actually say this client is ceased trading. It's easy as that. If you are holiday letting via booking.com, is this income tested on a gross basis or net or platform? Gross. Everything's gross. So for example, Uber drivers, Deliveroo drivers, they get £1,000 a week or every 10 days. But actually, that's £1,000 net, £1,500 gross. So again, this is a really important factor to consider. How do your clients trade? Where do they generate their income? Are there any costs at source? Everything is on gross basis. Everything will be based upon what's been reported historically, but actually, how accurate has it been to date? If a client has a single Sage accounting subscription but receives both trading and rental income, and these are recorded in the same software subscription but split amongst the correct nominal codes, can I make an MTD trading submission and MTD let property submission from a single Sage accounting subscription? The easy answer is no, because actually we have free software. So if you have a client with rental income, they can use Sage Individual to file their property incomes into story. It just makes life so much easier if they are split, okay? I know that there are some software providers who do tracking codes for it, but that is just creating problems because things will get missed when it should be by an extended nominal ledger approach. The one way of getting around it, extended nominal ledger and bridge it, and you may hear something from Sage soon over that anyhow. Next section, so client engagement. I should have made this a 90-minute webinar. Bear with me. A lot of content. A lot of questions. I like this. Doesn't matter. So engagement is really important. So when you think about clients, Be proactive. Be there before HMRC. HMRC are dropping letters, they're doing webinars, they're doing emails. You need to be ready to explain the who, what, when, where, and how of MTD. And this is all about having that expertise. But also just don't think about it's the case of MTD is all about digitalization. MTD gives them the opportunity to really understand their taxes, plan for it. How many of your clients are sending a tax return right now and said, I haven't got the money to pay my taxes? Well, that will not be a thing under MTD. Well, there won't be the excuses. They still may not say for it. There won't be the excuses. But this is the whole point. Better tax planning, greater awareness of financial capability. They'll have a better understanding in terms of, are they actually making profit, which covers their drawings. But the key thing is MTD needs to be weaved in terms of every conversation. But also with that, the engagement with the staff, colleagues, MTD is going to change how accounting practices operate. So everyone really needs to appreciate what it means, the details, the legislation. Everyone needs to be informed by the software-based capabilities, how to price every client, because it's all about having the right key roles and definitions of what to do. But also more important, it's the HMRC side. So as I said, set up your agent service account. We have a beautiful 4-minute video which goes through every stage, so you can see what you need to do through there. You may need to register your clients, unlock the dedicated HMRC helpline. However, that helpline is going to be screwed in February, March, because there'll be 42,000 firms on it. But really, it's a case of just getting through it and just get it done. I know we hate doing admin. I think it's one of those jobs which we just need to sort out and get done out the way. And then finally, is think about the vendors. Be inquisitive. What is happening in software right now is a really exciting period. There's so much innovation. It's not just about AI. Obviously, AI is really exciting in terms of what it can do. So Sage have released an MTD agent, which will do the whole end-to-end workflow of making tax digital, client segmentation. It'll even do a submission for you if you want to do it. But the key thing is you need to be inquisitive. It's not about price. It's also about capabilities and also the functionality it delivers for people who may be disengaged with software. But the key thing is having to do a full stack review of how you use your tools today and think about obviously partners who are leveraging AI. If you're not leveraging AI, you're going to be literally just left behind in terms of automation going forward. So I'm just having a quick look at questions. We'd like to weave those through as I come through. So I've dealt with Karen, I've dealt with the anonymous, I've dealt with that one then. Oh, here's some more. My client's turnover won't hit £50,000 this year, so they won't need to follow MTD until 2027. Is there anything we can do as a practice run to ensure we're ready for 2027? And testing is always on, okay? So if you imagine your client isn't coming in until April 2027, you can bring your client in now or in April, which means you can actually do MTD without any penalty points. Just experience it and see what it feels like. And therefore, there'll be no penalty points for your client. Even if your client's turning over 20 grand, you can bring him in now. You can just file whenever you want to, because there'll be no penalty points until 2028 for them. They only kick in when they hit the threshold when they're mandated. So bring your client in now and do it for free. Sage Individual, it's all sorted. For 26, 27, what about a client who was below the threshold in 2025? Okay. But is now trading above the limit when they're obliged to start quarterly reporting. Right, here's the scenario. 24, 25, tax returns submitted the end of this month, January 26. Their turnover is £40,000. So they're below the threshold and they will not have to do MTD from April 2026. In this financial year, being 25, 26, they're now doing £60,000. So they will submit their tax return by the 31st of January 2027. Once the tax return has been submitted, HMRC will know they're above the threshold, and then they'll have to comply with MTD from April 2027. The key thing is mandation is based upon the previous year's tax return. And I've been doing daily LinkedIn posts about all these little facts to help support you on that route. Okay, this isn't a sales pitch. This is more about an awareness when you get a bit inquisitive, okay? So from Sage's point of view, we're going big, all right? So the reality is, when you think about most small business owners, what's the first thing they do? They don't go to an accountant. They don't go to HMRC. They go start doing stuff in their bank, don't they? They put the money in and they make payments. So this is where Sage have built embedded accounting. Monzo is the first bank, and Monzo are already doing quarterly updates in the banking app powered by Sage, and more banks will be coming along. This is ideal for your 27, 28 year end clients. So where they're doing the banking, they can do the quarterly updates all within the app. Then we've got Sage Accounts Prep. So Accounts Prep will do a showcase of software soon, the next couple of webinars. This is a magical tool, okay? Bank statements, invoices, scans, Excel spreadsheets, drop it in, do your quarterly updates. Bank fees becoming in April, and this will literally deal with all those clients who are literally going to be hands off on software, and you need to do the work, whether it's sole traders or landlords. It's a magical piece of kit. There's a lovely little video Accounts Prep for 6 minutes online. Just Google it. The other key thing is, think of all those limited companies below the VAT threshold, 90 grand. You want to get the job done. Again, it'll get the job, take a 30-hour job into a 3-hour job. Then when it comes to, let's say, clients who want to collaborate, Sage Individual, specifically built for sole traders and landlords. It comes at £4 a month, where it's got sales invoicing and a bit more reporting, and it's got OCR receipt capture all built in. And that's the way technology lies. You don't need an auto entry or DEX, or that receipt capture should be in the ledger. And then also Sage Individual comes free of charge. So you've got multiple bank feeds, no sales invoicing, but ideal for those simple clients. And then we've got Sage Start, Standard and Plus. So heavily discounted for accountants, get it for £12, £13 a month. Job done, deal with the VAT and all the other bits and bobs which you want to do it. But also, more importantly, we've got Sage Copilot weave throughout. So not only is it, let's say, identifying anomalies, corrections, duplications, even fixing those automatically, we've also got the MTD agent, which does all the work for you as well. So I'm going to touch on the tax return, because I think it's important to have an awareness of how the tax return is changing. Before I do that, I'll kind of quick look at the questions. If I do my own tax return and VAT on Sage and need to register for MTD and the quarterly submission, do I need to register as an agent or act as an agent for myself? So I am assuming you are an accountant, you are VAT registered, and you are a sole trader. So you register yourself as an individual, not as a client or yourself as an agent. Question here. Yes, the recording will be sent. Yeah, no, don't worry, not a problem there. So on the screen, sometimes I do this slower. Oops. Is what the tax return process looks like today. Relatively straightforward. We get some information, we've put into software, we file a tax return, job done. Okay, that work. However, the MTD tax return is a fundamental shift. So not only is the client maintaining digital records, that's stored in software, you can review the quarterly updates, communicate with the client, but here's the key thing is, HMRC are doing the calculation, not the software. So just imagine when you've got amendments and stuff, HMRC will see all those amendments. So you've got those quarterly updates, it's bringing additional information from PAYE and interest and CIS. It displays the information, we then get to the end of the year, we bring the additional corrections through, we've processed it through, tax returns done. But the key thing is, the tax return is fundamentally changing. Number one, there is going to be no tax return. Because the key thing is, when you consider what's happening, is HMRC now controls the calculation, software doesn't. So just take a pause. As we all appreciate, you do the tax return, you present the calculation to the client says, I don't like that. The stock provision is going to be increasing by £1,000, so the profit reducing by £1,000. You then have a new profit figure. You put that through the software, and HMRC does not see that until the client signs off the tax return. The calculation is now performed by HMRC, so HMRC will see every amendment going through. Obviously, the reason why is because the way that MTD is happening is fundamentally changing. As software providers, we're no longer receiving the 56,000 word document. We only get some lines of code to pass that through. The next thing is there is no IR mark. Well, there is no tax return, okay? There is no tax return. There is just a tax calculation. So there is no IR mark anymore. There'll be a calculation ID, and there'll be a calculation ID for every time you submit information to HMRC. Fortunately, Sage Software stores every one of those. So you have a bit of an audit trail. The other key thing is the MTD tax return does not map to the self-assessment tax return. They've got rid of a whole load of boxes. And this is why I really encourage you to enter testing so you can start to see what the tax return process looks like, because your mind will be blown in terms of how it's changing going forward. But also with this, a good example is CIS, right? On the tax return today, we have a single box where you basically say, this is the refund from CIS. Under MTD, you'll now see every contractor and the CIS deducted at source. Now, that's a real value add, I think, because no longer will you have your subbies making up the numbers or saying, this is what I had deducted. You'll see exactly what has been deducted through HMRC live. And that's where we need to be open-minded and think about where the direction of travel is going with tax returns. But also, HMRC tax return is going to incorporate all the information they hold. So when you think about the future of the tax return, rather than putting data in, you're going to be reviewing and validating it. The reason why, when you think about potentially where it's going to land, is when you think about April, May time, you'd have your sole trade income all sorted. So you'd be there in the situation. PAYE is going to be confirmed June, July. Obviously, benefits in kind are going to be dead because they can be submitted via payroll on a monthly basis. Banks are now sharing information with HMRC in terms of interest. That happens about September, October time. I suspect that's going to be accelerated. And this is why the national insurance number is so important. Your clients for MTD are indeed identified by the national insurance number, not the UTR, because banks, institutes, local councils for property, mortgage broker, share brokers, they'll be able to share information by the national insurance number. So HMRC are going to get that feed. Now, what this does mean is, when is the tax return actually completed? Because you can imagine you are keen bean. You get the tax return done in June, but then some supplementary information comes through because of interest or something else. So this is why it's so important. You may need to change your terms of engagement with your client and understand actually that tax return could be dynamic for some of your more complicated clients. Wow, I actually did that in 56 minutes. I was surprised. But so there we go. That is your whistle-stop tour on all the legislation themes you need to appreciate for MTD. And I think this is why it's so important to get involved in detail. Watch the webinar back a couple of times and get some more detail. So let's just see if are there any more Q&A coming through. How is the actual return made? Will there be a button in the accounting records? So this is a really good question. So as I said, every software provider is having to build brand new MTD tax return software. From Sage's point of view, it will be surfaced in two ways. So clearly there will be sole traders and landlords who want to do it all themselves, not working with an agent. So within the Sage bookkeeping tools like Sage Individual and Sage Start, Standard Plus and all that jazz, there will be an area for obviously doing your quarterly updates. There'll also be a tax return for the client to do themselves if they want to. That's the nature of life. There are 35% of them. From an accountant's point of view, which we'll go through in the next webinar or the second webinar, is the software. So the MTD tax return software enables you to pull through the quarter four from HMRC, enables you to bring the trial balances from multiple solutions and be able to actually do the tax return calculation. So effectively, from our software point of view, the outputs is you have a nice tax calculation schedule. You can print off, PDF, get the client to sign if you want to, or you can do a digital handshake with the client to actually approve it. So the actual return doesn't exist. The return is going to be a list of income streams, income expenditure, details of other sources of income, and a calculation. And there will be a button within the software which you can fire off to the client for approval, and then you can file off to HMRC to actually submit that tax return, if that makes sense. And this is why, again, I stress it, so important to get involved in testing to really better understand the process. Question from here, I thought year-end adjustments will be made at the end of the fourth quarters in a fifth submission. So until it is finalised, an adjustment will be made right at this point. No, not really. So in the good old days, you had 4 quarterly updates and something called an EOPS, an end of period statement, and then the tax return. The EOPS was a bizarre, silly thing to have, okay? So here's the situation. Here is the practical element of it. We're doing MTD from April 2026. We do our fourth quarter on the 7th of May, 2027, okay? We've done the digital bookkeeping. Now you have a couple of options. So in the summer of 2027, you're going to do the accounts. You're going to ask the clients about bad debt provisions, accruals, prepayments, interim adjustments. This is where you have 3 choices. Choice number 1, you go back into the ledger where the records are and you do all the adjustments and you press quarter 4 again. So that quarter 4 is now up in HMRC and you can pull it down in terms of whatever tax software you prefer to use. Option number 2, you take the quarter 4 submission. That can either be taking the trial balance from the software and putting it in your tax return software, or you go into your tax return software and you pull quarter 4 down from HMRC And in the tax return, you then make all the adjustments, up, down, turnover, whatever you want to do. And that's what you can do in Sage as well. That's how we built the tax return solution. That's option 2. So and that is called a BSAS. That's not updating the quarter 4. You're doing a BSAS, and that goes with the tax return. Option number 3, something which no one talks about. Client does all their digital bookkeeping. They hand their homework to you on the 10th of May 2027. You look at it and it's rubbish. I mean, it is awful. You can't fix it. So what you do, you take the data, you start again, put it into your preferred bookkeeping tool. You can press quarter 4 again, or just take that data raw and put it in your tax return software and file. So there's a whole multitude of options. The key thing here is HMRC just want to encourage better record keeping, capturing information in the moment of time. That's that one sorted. Is there going to be a high risk of the wrong tax rates being applied? I know that this has been common PAY issue where people working multiple part-time employments, i.e. with so many different trades being reported. Well, no, because it's the end of year tax calculation, isn't it? So if you think about the tax codes are something which are applied through PAYE. That is what tax is deducted at source from employment. When you get to the tax return, you almost ignore the tax codes and actually just apply the actual tax calculation and look at the ups and unders in terms of what tax is being paid. Next question. Will the submission deadlines for each quarter be the same as VAT? Where you have a client where the VAT quarter is for March, and that needs to be submitted by the 7th of May, yes. So really, it's those clients who have a March VAT quarter, they will be the same. If they're not the same, you can change them if you want to. Question from Derek. If client receives income net of costs, i.e. rent of managing agency, they will need to be able to do journals and software to gross up income. Yes, they will need to do that, but they need to gross up the income. What you'll probably see, we'll have a clever little button in Sage Individual, which will do automatic grossing up for CIS and bits and pieces, just to make life a little bit easier. Right, I think I'm done, David.
Chris, I don't know about you, but I'm absolutely exhausted now. And I'm sure, certainly from what I can see in terms of some of the comments in the chat and all the rest of it, I think everyone is really, really grateful. I think they've got a much better idea now of what they need to do. But I think, to me, the key from all of this is really around planning. Get on with that planning now. Think about your processes, what you're going to be putting in place. Think about the software that you're going to use. Make sure it's the right software for the right clients. Plan on that client segmentation piece. And the other two points that I put down here was really about communication, both with your clients and your staff, and also think about your engagement terms. So
yeah,
brief summary there of where we are. Obviously lots more detail in your slides and such like there. We did have the question earlier on. The recording will be available for everyone later on, and obviously we have the rest of the series to come up well. We will delve into some of these aspects in far more detail. So, Chris, thanks very much for that just now. As I say, we have mentioned about the webinar series. In the 11th of February, we're going to look at the tools that you could need to make making tax digital easier. With that, we're also going to have a look at pricing strategy later on. How you can deal with clients that maybe are reticent to move across to digital side of things, and then a final 1 month to go scenario there as well. Before I talk about the rest of the webinars, there will be a poll which will pop up just shortly. It'd be great if we could get some feedback on today's webinar. That will either appear on your screen or in the chat box, just depending upon which version of Teams and how you're joining. In terms of other ICAS webinars, we are back. I'm back together with the ICAS Director of Tax, Katie Close, on Tuesday of next week, when we're going to have a look at the Scottish budget and all things that impacted on that. And then later on, a couple of weeks' time, on the 28th of March, we're going to have a look at some cyber security issues, and with Mitigo, our cyber security partner, how to plan for that cyber security breach that you didn't plan for. The links to sign up to the rest of the webinar series with Sage and all these other webinars are available on icas.com/events. So really, doesn't really for everything else that you need to keep up to date for in terms of making tax digital, we do have our MTD hub, which is available on the ICAS website. And if you do need further support, please either get in touch with the tax team or the practice support team through the ICAS technical help desk, which can be accessed either from the MTD hub landing page or through the support section of the technical resources section of the website. It only leaves me to thank Chris for his expert insight, and I'm really looking forward to the rest of the series. So thank you very much, everyone, for joining us, and until the next time, goodbye.
Bye-bye.